Alright, you're welcome to this live session. Great. We have to discuss basically about for me four four key things or two key things, which is basically the emphasis of this basics of technical analysis. Okay, you're welcome. This is Helgiot's live room. Yeah, we want to discuss basically the price actions, alright, plus market zones. It's just going to be very short time. I hope you all can have one, two things to say. You're learning, alright, because I think it's sort of. Thank you, Yasman. Thank you for saying welcome. Yeah, I think it's sort of very important and fundamental that we make this discussion on price actions. Meanwhile, let me pick over to BNB as a token of interest today. While we do analysis on BNB, I will introduce price actions. Welcome to everyone joining us right here live on Binance, and those who are right here also with us on YouTube. Yeah, this is your market analysis, and of course I hope you all have a lot to understand, right? Basically we'll start by introducing the definition of price action. Alright, so let me just clean up this chart, right, and then make a very clear chart before us. This is trading view, one of the important suits every trader must have while doing market analysis. So what is price action? I'll put it here that price action is the continuous printing of the market's candlesticks based on back and forth resulting from demand supply liquidity. Let's put it that way, right? Because I think it's very important we have it that way, and so we can yes, have a sort of better understanding of what we are discussing, so everyone can basically be on the same page with us in this introductory class on price action. It's not going to be very deep in, but I think and I hope everyone can basically have one or two things themselves to learn, and maybe I would say take home with them while they continue in their market analysis understanding, because market analysis is not in a day, it's a spectrum of learning that continues. So I say price action as a continuous printing of the market candlesticks based on back and forth, right, resulting from demand and supply, right? And I think that is very primary in understanding what exactly price actions are. It is one thing that major traders have to analyze the market and juxtapose what really is the matter when it comes to their own statistical understanding of the market, right? Here, very important. So yeah, having said that on price action, we have to look realistically into what that means. Standing up right before you is a chart of BNB USD, right, the Binance USD paired. And meanwhile, if you're not aware, we've discussed extensively on demand, supply, and other basics, right, as regards trading. You've got to check out previous video anywhere at Binance or on YouTube, and then learn what this exactly all about. All the back and forth in this chart and in this this view, it's a product of price action. It is the continuous back and forth, right, that results, or let me not say back and forth, let me say ups and down, right, let me put it that way. Let's say ups and down based on back and forth. I mean, back and forth is fair. Either back and forth, up and down, whichever one want to decide it, also because the market has different ways of moving. Three major ways, right? Uptrend, downtrend, and sideways, and then we've discussed about that also in one of our presentation here, right? And we've also given a smart understanding how you can actually make your choice of what is called a demand zone and which one is called a supply zone for you based on your own purview and how you're feeling the market, right? So yeah, having said that, I also made a very realistic discussion, right, as to what to look out for before calling a zone a potential strong maybe buy, or potential strong maybe sell. Now, having said that, as we have done in our previous sessions, I want to state very very importantly to you that all that has happened to BNB, making it to topple from those points like this that it is. All right, I'm going to be writing the dollar sign there so you can understand what I'm trying. Alright, making it topple and coming all the way down like this from this point right down like this is a proof of price actions. So, and price action concedes or contains candlestick, which of course is what I mentioned, and then as a candlestick you also have, and I think let me highlight the very important part or emphasis of this price actions definition. Demand, all right, you have in price action demand, all right, market demand, and of course market supply, that is based on liquidity. Liquidity is the money inflow into the market, and I hope that makes sense to everyone right here today. Why are we saying this, and why am I saying this? I'm saying this because we are watching the entire market, and what we're seeing is that for the market to have this upward move, downward move, sideways move, it is a product of price actions. And of course actions is an active, I don't know how to say this now, I don't say action is an active word, or action comes with a bit of forward, backward, some sort of movement, right? If you see someone is actually having some actions, right, then you see the person taking some really strong move. And I'm telling you this because that's essentially what price action is about. When you see the market price, and that's why you see the market price not sort of static, right? Very important. Now look at this. The action the market has taken from this point, data the 12th day in the month of June, which of course is a Monday. All right, it's sort of within a zone. And I think if I would mark it out with my rectangle, it's very obvious for you to see that this is the movement, right? Just within that zone. That's a price action. And there are key things to look out for when you are making a very important discussion, right? When you're making an important discussion on price action, there are key things to look out for. You want to look at demand zones, you want to look at supply zones, you want to look at the type of candles the market is printing, right? Because all of these actually coincides in the definition of what price action is about, right? So you want to know what all of these actually imply and how they actually define what the market is. So I think so I think it is sort of important to state that the market's response to demand and supply and its movements based on whatever other news or anything is a product of price action. Now, the importance of studying price action is so we can know what exactly to articulately predict. Now, there are candle wicks in the market. This example of candle wicks and candle wicks. Now, this tells us of some certain action. Whenever you're having candle rejections, it is for two reasons. The market is either resisting a zone or it is reacting to a zone. Two things. So now there are in the financial market, right? Just further careful. Wicks now. I'll explain that. Just wait for me. In the financial market, which support. Yeah, there are candles in the financial market which I would say which are a response, right, to a resistance, rejection, or a mere reaction. Now I use those words carefully so we can understand what the price action could mean when you're seeing the market candles do either of these, right? It could be a resistance, let me write that in caps lock, resistance, or a rejection, all right, or simple reactions. So two things now, or three key things, right? So I think that's very important, so I can sort of assure you of what we might be seeing happen in the case of Yeah, so that's cool, right? That's the second point I think you want to take note of, right? Very, very important. So there could be resistance, right? And that's when you have the candle wicks forming. These spikes on the top of candle bars. Let me make this well zoomed out so you can see. All the spiky movements and the spiky movements are all the function are what we call candle wicks. It's just like the normal candles you have right in your homes, that when you burn from the top it burns the whole body downwards, and then you have the wicks standing there to prove that, you know what, there were candles here before, or there were wax here before. Wax used to be in this part of the candle wicks before, but because of the prayer from the the prayer and the heat from the fire, you have the body of the candle melting downwards. So that point where you meet, of course we all know candles, right? I mean, who doesn't know candle? Let me show you an example of candles and the wicks. So let's check if we can find Google. I'm sorry, I've just have to come to Google so people can have a pictorial view of what I'm talking about and they will not confuse the candles I'm making reference to something else. So I think you can have, yeah, those are candles. I think let me just come to images and then make you have a better display. So sorry for going that far, but just to help with the understanding. So that is the reason why I've got to go that far, right? Yeah. So I think that's okay. Yeah, so there you go with candles. So you can see these are candles, and then you have the wicks, and when you have it burning, right, obviously I hope it makes sense, right? When you have the candles burning, then you can be so sure that there's going to be a reduction in the wax, right? The wax burns off, right? These are candles, right? Now cool. Now I think we don't have to stay that long. Yeah, now having understood that, then you have to know that the whole happening in the market, right, is a product of prayer from demand or supply. Of course, this demand or supply is simply known as buys and sells, and this prayer from buys and sells is what actually, you know, sets the candles burning, right? When I mean the candles burning, I mean either the candle will print to the upside, like it will burn, like it's burned from here towards the upside, or it will burn from here downwards. Whatever the action from this point to the upwards point, to the upper point, like you're seeing from this. Let me call this let me just name this candle A, if it's gonna be fine to name it A. So I'm gonna name the candle A. That's point, right? A, double click and then write A, right? Cool. Then that's, sorry, not caps lock, just simple small letter A, and I'm gonna put it in a 12 font. So no, I think that's too small. 14. Cool. So now look at this. So the whatever that makes this the thing that makes this candle to burn upward, this candle A upward, it's called liquidity, of course, and this is the demand liquidity. So that's the money. The money entering the market is a fire, right? It can burn the market upward. By burning, I mean it can push the market upward, or it sends the market downward. So you see, this push upward is because of the buying power, all right, sort of overcomes the selling power here. So the price action here is a bullish price action, and then we're having a sort of ring. Now this is based on just one candle. Meanwhile, this is a daily candle where one candle represents a day. So that means because of the whole day, there seems to be more strength in the hands of the bulls here on BNB from this buying price at $222, and they push the candle to close at that top there, right, in $239. Of course, the next candle opened here, right, at limit here, but because of the prayer of the bulls or the buyers have in the market, they push this old candle to this point, and it got there, but of course it closed like this. When it closed on the body of the week, right, and the body of the week where this week ended. That's where the candle closed. And oftentimes, if you notice that if some candle actually die out, we have the body of the candles, I mean the wax still there, right? Some of them are not burnt off and some are fully burnt, right? Then you have the new candle opening from this top towards the upside, because bullish candle, right, open from the bottom to the top, bearish candle open from the top to the bottom. So this candle, open from this top right here, and was burning to this point where it sold off, and because of the buyer's prayer, it moved to this point. So the buys opened from here and they took it like that, and of course the sellers began to sell it from there, and it came like that. And that's how you have the sort of up and downward movement in the market, because of the prayer that it's been exerted, right? That's very, very important, because of the prayer that has been exerted within the market. And I think it's very, 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 very primordial, important, primary, necessary, and empirically I don't know how to say this, but very, very essential that we see these price actions happening with the market, right? So what makes currencies and countries to go upward, downward, or sideways is because of the money that's in the financial market, and of course, fiscal policy that has been deployed by government in power. Now, having said that, I think it's very, very important for us to note that summarily and essentially, demand and supply defines the candlesticks movement, their formation, and of course their price actions. I think that's important, right? Demand and supply, which is the third key thing I'm going to be writing right here in the course of this entire session. I hope you've learned something great. So I say summarily, demand and supply defines the formation and market playouts, let's put it that way, of candlesticks. That's important for us to state, right? Very, very important for candlesticks and price action. So that's cool. I think that makes a lot of sense to me, and I think it does to you. I'm returning the font to a 16 font, and I hope that makes sense. Now, cool. That is quite to me sweet. Sorry. Okay. All right. So yeah. So what do you see there? I think that's cool. Now, having understood that, you might be asking, so now we've understood that price actions basically the principles of the market candlesticks based on the back and forth resulting from demand and supply and liquidity. Now, how do I now study price action? That may be a question, to know where exactly is going to be the next market direction, because the bottom line and the common ground, or the emphasis and the need for why we know or study price action is so we can now make a realistic prediction on where exactly the market is going to be taking us to. If we cannot make a realistic prediction where the market should be taking us to, then there is no importance for price action. How do we study that? Now, don't forget this important addition which we added, the second point here. I think I'll just be naming them point 1, point 2, so that we can have a better view, right? Let me just write this point 2, this point 2, right? Very important, please. Yeah. Okay. So we have point 2 there, and then you have point 1 here, please. I want to just add that addition, right? So let's continue. It's all gonna make sense. I tell you, point 1. So that's point 1. So this point 2 and following point 2 is what we now call point 3. All right. So I hope that makes sense. We're wrapping things up soon. Just carefully follow. This is the basic thing we want to introduce, right? Yeah. So just carefully follow. Once we've achieved this, I think we can call it a wrap. Thank you so much for sticking to the very end. I'm waiting right up to this point. So this point 3. Yeah, so cool. Now come with me to this definition and this understanding. Don't forget, we talked about, we said this, this introduction is very, very important for us to do so that we can understand market zones with price action. So yeah, so now you've been watching the market. This is a daily candle, right? If you've been watching the market, you begin to mark out your zones, because if you're a trader, you know that there are key zones the market respect, which of course is demand zones and supply zones, right? Very, very important. So supply zones are the point where the market sells from, right? Supply zones are the point where the market sells from, and of course demand zones are the zones the market buys from, right? Very important. So just all these definitions to your heart, right? So for the market to have traded off, now that means you must be looking at the past price action, or the past candle prints, and the past reaction, or the past movement of each candlesticks, so you can come to a realistic and a fair judgment conclusion on what you think the market is doing, right? Yeah, I think so, definitely. So if you're very, very conversant with the previous price or the previous price movement of the market, then you're going to make a realistic future or prediction of the future, right? Because you've got to look at the past of the market. I say that carefully, and when I mean the past, I mean look at the previous actions the market had created, so you can make a realistic prediction of what the market will do in the nearest future. I hope that makes sense. It makes sense a lot to me, because I see that it is very, very quintessential for us to state it without any distortion of any kind, right? That yeah, the market must of a certainty take its everyday action from the past movement it had taken, right? Yeah. So I want to say this. So the market, sorry, we must take important prediction, right? So it must take important prediction from its previous price movement, right? So right, either it's the previous movement in the day, in the hours before. That's how the market comes about it. So the market must first take those predictions. So that's very, very essential for us to state, right? Very, very important. Now, having said that, now if you've noticed this, let's just even start from this particular time. This is Monday, November 2022. I want to pick my trend line, and yeah, I think I'll pick my trend line. But let me pick maybe my horizontal ray. Yeah, let me pick it and just mark that zone. Now I mark that zone with every sense of care. So I will change the color of that zone to, no, let's just to maybe black. That's I don't know if that zone's actually good. Yes, I think I'm gonna make it that way. Even though I don't like the color, let me just maybe I change the color to, yeah, you can always do this in your trading view, please. I think blue is fair. So now you notice that from this spot on this Monday, the BNB, this coin dumped. By dump I mean it's sold off, it went down about 28 or 26%. Now you will really mark out that zone, right? I'm picking my cycle to support my analysis. Now you pick out that zone and notice that zone, and note that zone rather as a supply zone. All right, so I would really, if I were the one, I will mark out, I'm sorry it's looking so multiple colored, I'll mark out that zone and write it there that this is a supply zone. Don't forget, I call that, I'm marking that a supply zone. Once I've written a supply zone there, I want to also look out for something very important. What is the important thing I want to look out for? I want to also look out for after marking out that zone, that the zone is a supply zone, you will be looking at the market printing. So this takes a couple of days, 1 2, because it can't represent the day. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20, about 20 days for the market to come to this low point here. So you would have realized that the market entirely for the next 20 days brought the market down, and so that means you already are aware that the market is basically playing into the hand of suppliers. So you will know, number one, that who are in charge of this market, and the market sold from this point. You believe and assume that those who are in charge are the bears. The bears are the sellers, those who are supplying, those who are shorting BNB. Now that means you will be so sure that they're not going to remove their hands off BNB at a go, right? They will definitely be, looking out for how to make BNB go more down. So when you're seeing the market coming to this low point and carefully going higher, you will already begin to make important notice at what the market is intending to do. And you don't forget point 2, which say that there are candle wicks in the financial markets, which is a response or resistance, rejection or mere reaction. So candle wicks can be mere response. Now you have this point as a supply zone, right? But the market hasn't traded to that point. And so what you want to do is that you want to look out for that point as a potential sell point. Now looking at this, the market is moving upward because there's something called the market. There's something called break of structure and RTOs. Break of structure means the market has broken structure, and RTOs means return to order block. Now I would not talk about RTOs today. I just want to speak about how candle wicks operate together with how candle wicks operate together with with market zones. This is a zone, right? Yeah, and you mark out those zones and you see that the market is doing something. Now look at this. Immediately the market got close to that zone. Do you know what the market did? It sold off. Look at this, and that's what brought BNB down. So you see the entire movement that is sort of covered up within this shadow, right? Like this is just a mere shadow, right? I'm gonna be changing that to a dashed line and writing liquidity on it as money a dollar, which is just, you know, the gameplay that liquidity is sort of having. So yeah, you have this movement, right? And then the market came here. When it eventually traded into the box there, it sold off downward 33%. So those who are aware of this, you know, understanding of price actions and the actions this market is taking is a very, very funny one. And by fun one, I mean the market is just playing its game into that particular supply zone, this one here, of course, which of course extends from this part of the chart to this part of the chart, where when the market got exactly into the box or close to the box, you know, it sold off. Because you might not be aware, if I zoom this out very well, you see that this is not close to the box, but this is close to the box. We already had candle reaction or candle wicks reaction at this point here. All right, I don't know if you're seeing that. Let me zoom it out better. So you have a candle wick here, right? This is somewhere in the month of March, but that was not going to bring the market downwards because the market is also responding to a particular action. What is the action? It's sort of been holding this this zone, right? This point has been holding. It's held here. It looked as though it broke here, but it wasn't going to hold. It's also held here, but the zone held here, it's a very funny zone, but those are ways to use price action. It's also held here, but yeah, and it went a little bit above it right here. So I'm saying that that is one of the ways we use you know, price candle wicks, right, together with market demand and market zones, which we've just essentially explained. And I hope that makes sense to everyone, right? So yeah, that's very, very important. So welcome, thank you for joining, and I hope yeah, as you join in, it's going to be great if you can subscribe or give us a following and become a fan. It's, you know, sort of affirms that we're dropping something of quality, you know, importance right here on this chart, and that you're also learning something very, very you know, very, very resourceful in our opinion. So I think that's very, very important. So now you've seen that the market zones, right, either it's a demand zone or a supply zone. Those are the two key zones, and sort of, you know, amplifies, right, and represent what we might have you know, sort of envisaged, right, as regards what the market price actions can be. So when you're seeing the actions, you know, it is because the market is targeting the zone, and when you see the candles taking a particular pattern, it's because also of a potential response, which could be a sell response, a buy response. Whichever response you see in the market, it's all the response, right? So when you see the market keeping up with this, the price actions often leads to price pattern. Take note of that, and I think I want to write that also in the chat box, right? That the market price actions often leads to the formation of price pattern, of candle pattern. The price actions, right? The market price action. The market price actions often leads to, yeah, market patterns, right? Right, very, very important. So sorry, it's raining here, and I hope we get a software to buffer this. Yeah, so yeah, I hope this helps and we can make the most of this learning. So now you have this pattern. If you're not seeing the pattern, I think you should see it, right? Let me make it. So this is a pattern, right? This is a triangular pattern from right in the market here. I'm just picking my polyline, and then there you go. Are you seeing the pattern? So now these patterns are a product of price actions. Now you will not see all of these if it's not because of price actions. So the market coming downward like that after seeing those movements is a product of the pattern the market is forming. So I think it's very, very essential and, you know, important that we state this without any further ado, or whatever it is, that this whole push, move, and whatever you are thinking of is a function of the market price price actions. I don't know if this is actually essentially helping someone out there and making you realize how important price actions can be, right? And I think it is very, very important. So we have actually learned something again, which I'm going to write on the chat box, that price actions leads to information of price pattern. So that price actions often leads, right, to the formation of price patterns, right? So that's something we want to take note of, right? Very, very important, right? Yeah, cool. I hope that's cool to you all. Fine, sweet. So now, so you have this pattern. There are different patterns in the market. There are falling wedge, rising wedge, descending channel, rising channel. What about channel pattern you want to think of, right? It's just about the pattern that the market sort of has, or have, right? Which I think is very, very important that we take note of. So I think it's important that we just take note of that, right, as regards the market movement. Right, I don't know if anyone has any question for us. We've just done a couple of maybe 28 minutes or about or so, and I hope everyone is been having massive learning, right? So you have those patterns coming, and so just the way it's bringing the market down, you can have the price action taking the market upward. Don't forget that all of these are very, very important in our discussion as regards how the market is being affected, influenced, or likely helped, right? Let's put it that way, as it comes to the market's understanding of what Lima has. So yeah, having said that, having said that, I think it's also important to begin to make references, all right, to examples in the past how price actions have formed price patterns, which I think is important. This is one of them, one example of them, and you can always find them in different pairs: Euro USD, foreign exchange pairs, VXY, what have you, indexes or index, or that's think of whichever crypto. I've got some example of crypto. Let me even pick out a coin. Let me see. I'm going to look out for Ep3 USD. I've not done analysis on this pair. I'm not sure if I have. Not find this on the chart box. Yeah. So now look at this. Now you have Ep3 USD like this, right? Now that's Ep right down at $2, right? And without anything, I can already predict that Ep will buy. Why is that? Because I already know what the price action is saying. There are reversal price patterns, and there are different patterns that we use in trading the market. The pattern I'm seeing on Ep already turned to reversal, and Ep will also begin to buy. If you want to confirm this, I've not checked this chart. In fact, there are no drawings right here. But from this point, right, this point here to this point here, I'm seeing what looks like a bullish divergence. We will write it out for time before we even check it out, right? It's called a bullish divergence. One of the important things we're using now in the trading market, right? A bullish divergence is often spotted with the RSI chart, which is called, it's an indicator, and yeah, so you would see that on the indicator when you draw the RSI, you click the RSI, all right, and the chart comes up. Then what you would find right from the chart is that you'll be seeing an opposite direction in the same key point where you had drawn your trend line. I had drawn the trend line from this point here even downwards. That same spot right will look very, very opposite. Like I said, this is because I'm already very, very conversant with the fact that I know what the market's going to be doing. That tells you that RSI Ep is about a pump, and that's a divergence. Now I'll be talking about confluence later on, but I want to just make this video a very, very introductory one, so you can understand price actions and all that comes with that. Now we're talking about our price action often leads to the formation of price pattern, and then we cited a triangular pattern right there. Now look at this. Don't forget to talk about weak reaction, weak response, weak rejections, and just some sort of responses that candle wicks give us a clue that the market wants to do that by ourselves. Now see this. We first add this weak rejection here, right? It was quite sharp in this is daily candle, don't forget. It was quite sharp closer to the other block. If you're not sure of this, you have to join the previous analysis we've made. We introduced other blocks there, right? This is another block. For us, it's a sell or a bullish or a bearish other block here. So we're gonna write BEOB, All right, so that's the bearish of the block, BEOB, which is bearish of the block. So it's going to be quite obvious. I think it just make it bigger. So you notice that, you know, Ape traded from this bottom, got here and got the weak rejection. It came back here, but of course you will have noticed that you would have written that out if you're very conversant with trading, and you will, you know, pick out a tool like this and write it here and say, you know, weak rejection or weak reaction. I say weak rejection, right? It's a rejection. It's so sharp a rejection that it's threw the market down like that, and then you see the market sort of trading, and because it's not yet find every reason to sell off massively, it might want to go a bit above, right? And that's what it did. Because if you look at this week, I'm going to zoom it out very well so you all can see the wick. This candle wick is just exactly here, and the market seems not to have had enough of the sell, right? And it wants to go above. Now I must zoom it out so you can see that the candle wicks, it went above it, right? Because there are potential orders, sell orders, that have been kept in limit with the market price action must take it above. So are you seeing that, right? I'm picking my cycle and I'm spotting this out for you to see, right? That's it. And if you come right here, all right, same cycle, and you see that it went right above it a little bit, right? Cool. I hope you see that, right? Look at that. So the same spot I was at top here is still having a little bit of, because the market is expecting to react, you know, come to pick up every order, and that's why it still went above that spot, right? Do you understand right now? So definitely those who have their stop losses here will have been humped out or knocked out, while the market find every reason to sell crazily, not only down but even below the spot, because this is the spot we're talking about. I'm going to be picking out my, I'm sorry, I already made a mistake there. I'm going to delete that. I want to pick my arrow. I'm going to wrapping up this session very soon. So this spot here was a key a key zone, right? I'll just mark it with XXXXX. No, let me not use XSS. Let me use let me just write the zone, word zone, right? Yeah, so now you have that, right? And you see the market, because of this strong aura that speaks here, it has every reason to sell. Starting price action will help you understand that the market is carefully forming a triangular pattern, or let's not say triangular pattern, it's carefully forming a consolidatory pattern, right? And that's what we spotted here. Look at this, the market is moving upward and downward, and there's no sudden downward movement. Those who understand market orders and market movement will know that there's an other block right there that has not been fully mitigated. Now look at this. Let me zoom this out so you can see. But that's let me use an arrow. I'm going to wrap this up soon in 1, 2, 3 minutes, right? So please, because we've done a basic introduction on this and it's already past 30 minutes, which I'm not thinking it should be. Now look at this. You have this here like this, right? And then you have this here like this. If you notice, the market has been having a lot, if you notice, it has a lot of rejection at this point, because this is already a zone. I'll write the zone there. So the market has different zones, and the more you study price action, which of course includes buys and sellers, you understand what the market is doing. So the buyers and sellers struggled at this point. That's why you see this is a daily candle that looks as though the whole candle burnt off. You're seeing this, there's a lot of prayer here. This day particularly must be a very creepy day for Ape. This was a creepy day. So you can see all the whole price action here that took place here. Let me make this zone, well zoomed out and possibly reducing the whole color in there, so you can see this here, all of that, right? Beautiful. Now since that is very clear, when the market now broke out of this, it took it exactly to the point where it will grab every sell order that is still yet left untaken. So those who understood price action, we know that this will play out in the market is because we want to break out of this sort of maybe triangular pattern, right, that has been formed because of price action, right? Because this is a sort of triangular pattern here, right? And then you see this, and then it's broke out, right, to pick the orders here only because you want to come down. So those who understood the whole gameplay with the price action on the right, as the market is printing, I should begin to mark out zones, right? Something you must know. I think I will write that for the chat box. As the market is printing the candle, mark out zones and be patient, right? You don't take trades just of just one candle. You look at the mass of previous candles the market has actually carefully informed your decision of trading, right? So I mean, as the market is let me write that down. As the market is printing candles, it is wise as a trader, all right, as a trader, to mark out zones, key zones at that. I think I will write that. I mean key zones, right? When I mean key zones, I mean important zones, right? You've seen me marking out key zones of demand and supply. I mean, that's very, very important, right? Very, very important, right? Yeah. So as the market is printing candlesticks, right, you just have to mark out those zones. And then why are you marking them out? This is because you want to be patient. These zones have been marked. Let me write that, right? These zones have been marked. All right, so you can patiently wait for a trading, all right, into those zones for effective and profitable sorry for effective and profitable for effective sorry and profitable for effective and profitable execution, right? All right, so that's very, very important, right? That's very, very important. So I think it's important to state, right? So yeah, so that's something that I think every trader must be aware of when it comes to market analysis, and then using what we call what do we call this now? What we call price actions, all right, with market zones. So you build a market zone. This is a, you know, it's a resistance zone, right, that was broken out, and then the market came to pick the orders from that point, right? If you come to a 4 hour time frame, I think we're gonna be stopping here, see that, and then you'll see the candle. But you see, I mean, there were some times you got insta candles. I think we just have to make mention of that, right? Because all of these are very, very important when it comes to understanding the market, right? So I think let me just even show you 1 or 2 candles. There are candle wicks, right? When you see a doji candle that forms, that can begin. Now there are reversal candles, right? This is an example of reversal candles, right, on Ep. This is an example of reversal candles. When you have a very, very, yeah, I'll show you one of the candles that form it. That's a reversal candle. I will show you one. So this example, this is a reversal candle. When you're having a candle like this, that is like an armor in between. That's an armor candle. This candle here, you can see it even looks like you're having the hand, right? When you're having the armor candle in between a sell and a buy candle, you understand that we're already coming to a reversal. This trend is already ending. The bearish trend on Ep is basically ending, and then yeah, that's very, very important. So, and again, this kind of candle is a it's a bearish of the block candle, or an engulfing candle that prints when the market is releasing its last batch of sell. So I think that's just it. So I think without any further ado, I want to just show you the whole thing that happened during that time when I was showing the whole back and forth as regards the potential sell-off that took it downward from that high. So there you go. That was a triangular pattern. So yeah, that's what I was going to write. I'm gonna be done in 2 minutes, right? I think that's so. I hope it makes sense, right? This is a triangular pattern. Yeah, so you can see that the old printing was because there was a stroke here, a lot of weak reaction, a lot of back and forth, a lot of sell-off on buys. That was very, very creepy. When the breakout of this took place, it just was to go pick orders right there, and after the orders were picked, boom, we sold off. I think that has basically helped to understand what we're talking about as regards the price action. So price actions, again, let me go back to the BNB USD chart, right, where we had our analysis, right, on our introduction. I want to reiterate the point we have made as regards this whole presentation, and I think I want to say thank you so much for coming. I think there are no questions. So don't forget the whole discussion we made as regards you know, zones, all right, and as regards definition of price action, which of course is just studying the key movement. Now look at this. This tells you that the market is keeping within a zone. Look at this week, right? It came quickly down and respected this zone and went back up, right? So yeah, price actions, like we said, often leads to the formation of price patterns, triangular patterns, descending channels. I think we'll talk about price patterns about a time in one of these our series of price of the ABCD of trading, right? Very important. So I think, yeah, and then we've defined the price action as the continuous printing of the market candle based on back and forth resulting from demand and supply liquidity. And we also say summarily, demand and supply defines the formation of the market play out candlestick and of course price action. So I think that's very, very important for us to just take it up. Thank you so much for coming. We're so grateful to have you around. Please take care of yourself. We may take it some other time. You're on Binance or YouTube. Thank you. It's LKL or Geared Up on YouTube. You can always reach out to us again. We love you all. Peace to you. Bye.